Yeah, you are welcome to today's class. And sorry for the slight interruption. I think now you are okay for now. Today, as I've indicated, we are looking at accounting theory, and I would like you to have your books, your handout with you, and then your jotters with you, so that you'll be taking down notes. After we have done, I'll upload it on the YouTube portal for you, so you can have a playback. I have a prepared note here, but I'm desisting from sharing it so that all of you not going to be writing the same thing. I want you to put down your notes, then later I'll give you copies of it in the past question, okay, so that it will guide you in answering it. But for now, I'll do the explanation for you, so you pay attention and then you take down your notes. As you know, we are in a class setting, so I'm not muting anybody because we'll be having a live discussion. So please, the noises at your background should be minimized so that you can hear me. Now, when you look at the very first question, accounting as a discipline has been viewed by many schools of thought as having different perceptions and understanding. Clearly indicates the various images of accounting as perceived by the various schools of thought. Now, before you understand this particular question, you must understand the question in such a way that there are various ideas or there are various schools of thoughts that are describing one thing, or there are different people describing one thing. So it's like they've blindfolded all of us over here, then they've asked us to explain or define or describe the elephant. The one who will hold the trunk of the elephant to describe the elephant based on the trunk. The one who holds the tail, the one who holds the ears, the one who holds the body, the one who holds the leg. Everybody will be describing the elephant the way they feel it in their hand. That is how these people are describing accounting. You are working. Delphina, I've muted you, you are disturbing us. You are walking and then you've seen a lady wearing a mini skirt. Then you form your opinion. You are in your office. Somebody came, entered with coat and briefcase, and then with this coat of arm flag on the chest. Then you form your opinion. You are in your office. Somebody walking with a t-shirt with a bathroom slippers, and then you form your opinion. Maybe the opinion you are forming is wrong. That is not how the person is. That's what the person is portraying to you makes you form that particular opinion. That is what we are talking about over here. So the various school of thought seeing accounting in a different way. And the way they see accounting is how they explain accounting. Now, let's look at the very first question. As I was saying, we have various images of accounting. So one school of thought see accounting as an ideology. One school of thought see accounting as a commodity. One school of thought see accounting as a language. One school of thought see accounting as a historical record. One school of thought see accounting as a current economic situation. Another school of thought also see accounting as an information system. Now, let's start explaining them one by one. And this is where you must be taking your notes. Let's start by those who see accounting as an ideology. What did they use, or what point did they raise to buttress their point? So you ask them, what is accounting? Then they say, oh, accounting is an ideology. Accounting is a subject full of ideology. Then you ask them, why are they saying that accounting is seen as an ideology? Then the very first thing they tell you is that because accounting is based on the views of people. Because accounting is based on the ideas of people. They say that accounting is seen as following people's ideas, following people's views. And because of that, accounting is seen as an ideology. Why are they saying that? They say you wake up there and say, oh, the gaps, generally accepted principles, the IFRS, the IPSAS, they are all views and ideas. So it is somebody's proposition we are following. They said, debit the receiver, credit the giver. It is somebody's proposition we are following. Debit what comes in, credit what goes out. It is somebody's idea. You must match expenses against revenue in the ensuing year or in the year in which they have occurred. It is somebody's idea. The business is a separate legal entity, and so therefore it is separated from the ownership of its members, or the business is separated from its owners. It is somebody's idea. So they all said, or these are some of the things they used to buttress their point. And so therefore, they said accounting is seen as a what? Ideology. Now, I want to read my submission for you so that based on that, you can jot down something so that you see how you can put these things I said together and make it as one explanation. Now, I said accounting as a discipline has been evolved around certain beliefs, rules, and regulations, which regulate the practice of accounting. Accounting as a belief or accounting as a discipline has been evolved around certain rules and regulations which guide the practice of accounting. Accounting is seen as an ideology because it depends on how people share their ideas and perception. So the key word there is what? Sharing of ideas and perception. The angle that accounting reveals to the person will inform how the person defines accounting. So if the angle that is shown to the person is the angle full of ideas and principles, the person will define accounting based on that. The person defines accounting depending on the area he or she finds himself. This school of thought see accounting to be ideas that have been followed without questioning. When you came to level 100 and then they told you debit the receiver, credit the giver, did you question the lecturer? When they ask you, credit what comes in and debit what goes out, did you question the lecturer? They ask you debit all expenses and credit all gains and incomes. You don't question the lecturer. They ask you, you don't need to provide for, you don't need to anticipate profits, but make provisions for losses. You have not questioned, we just followed it. Are you getting it? So whether you understand it or not, you follow. It is someone's view that has been refined and followed. Every situation in accounting has an idea backing it. So everything you do in accounting has an idea backing it. And that is why, or these are the points this school of thoughts have raised to buttress their point that accounting is seen as ideology. If you have any question, you can ask me and then I'll answer you. So that is my first explanation to the very first point. Now, the second point, or the second school, or the other school of thought, they will also ask, what is accounting? Then they said, oh, accounting is a language. Why are they saying accounting is a language? So you ask them, why did you say accounting is a language? Then the very first thing they will tell you that, hey, accounting is full of terminologies related to business. Everything there is related to business. It's about business, running your business. Every terminology you see there, in one way or the other, has a relation with a business. And that is why they say accounting is seen as a language. The terminologies that are communicated in the field of accounting, if you are not related to business, you cannot understand it. If you are not a business related person, or you are not interested in business, you will not understand it. That is what they mean. Now, let me also put my submission to you so that you will see what I mean. I said the various business activities of a firm are reported in accounting statements using purely terminology or languages in accounting. So every communication by a business are reported in each accounting statement. Whether the business is doing well, the business is not doing well, whatever is happening to the business, they are thinking of expansion or whatever, they communicated it in their financial statement. And if you cannot interpret their financial statement, there is no way you understand whatever they are trying to say. Now, I went on to say that accounting is full of terms that are related to business. It reviews the status of a business. And so therefore, it is structured in the way that gives meaning to the reader. Financial statements are reported in a language that followed certain rules. And without following these rules, you will make the users misunderstand the accountants. So these people say that because the accountants communicate with the only instance you hear of accounting in business is where the accountant is rendering account to its users, or where the accountant is trying to communicate an information to the users of accounting. That is the only instance you are going to hear about what? Accounting. And because of that, the accountants use terminologies that are related to the business. And if he uses terminologies that are related to the business, he is communicating a specific language. He is communicating a certain language. And because the communication is not just the normal tree and ga and ewe that we speak, it is an accounting language, and until you understand that language, you cannot interpret accounting. They see accounting as a language. That is what this particular school of thought also used to buttress their point, that accounting is seen as a language. I get to the scenario now. Now, the other school of thought also sees accounting as a current economic reality. They see accounting as economic current reality. Why are they saying that accounting is seen as a current economic reality? Why are they saying that? Now, the reason why these people are saying that is because accounting always reveals and reflects the current economic situation within which the accounting entity operates, or within the macroeconomic environment. So if today we have COVID-19 around, the way COVID-19 will affect Ghana will be different from the way COVID-19 will affect the US. In fact, the countries that have not recorded COVID-19 will not even have any impact. The way they will report in their country will be different from the way we will report in our country. So they are saying that depending on the macroeconomic environment that you find yourself, the accountants report based on that. So accounting is seen as revealing the economic reality of a business. And so therefore, accounting is an economic reality. That is how they will define accounting. Because at the end of the day, whatever happened, a core year, it will reflect. If it doesn't go on, it will still reflect. And that is why they use that particular point to buttress that point. I also want to read my submission to you so that you can pick some points from it. I said accounting has been reviewed as a means of reflecting economic reality. Accounting review macroeconomic environments. The fiscal policies has a direct impact on the business entity and thereby have a direct impact on profit. Let me explain this particular phrase for you. Why are they saying that the fiscal impact or the fiscal policies of a country has a direct impact on their business? When we talk about fiscal impact, you hear people say physical. It's not physical, it's fiscal. F-I-S-C-A-L, fiscal. When we talk about fiscal policies, we mean government spending and revenue. So if government collects more revenue, it affects the business. If government spends more, it affects the business. And so therefore, whatever government does that affects the business has a direct impact on your profits. So if today, government say that there's COVID-19, every business in Ghana don't pay tax. In fact, it will have a direct impact on your profits. If government say that today there's COVID-19 and he needs more money, and so therefore he will tax you more, it will affect your business. If today you can see that people say that, hey, in election year we spend money. If government spend more money, it also have a direct impact on your business. If government does not spend, it have a direct impact on your business. And so therefore, whatever happens in an economy has a direct impact on your business. That is why you see businesses crying in Ghana. Government, because whatever government does has an impact on their business. And this is what these people base on and say that accounting is seen as revealing the economic reality. Now, and so therefore, accounting is able to reveal whatever the economic situation is in their what? Account. So this is just my brief submission, or this is just my brief explanation to this particular point. The next point, they said accounting is seen as a historical record. Why would these people also say that accounting is seen as a historical record? The simple and short answer they gave is that without history, there will be no accounting. That is the simple and short answer they gave. That without history, there will be no accounting. In fact, they went ahead and said that if you want to prove them wrong, tell them whatever transaction has happened in accounting and it has never happened before you record. They said every transaction you record in accounting, it happened before you record. All the transaction that you record, sold goods to Ama, bought goods from Ama. That is how the statements are always shown to you. Have you seen in any of the questions, I will buy goods from Ama, I will sell goods to Ama? No, you have not seen it before. Oh, I will purchase 100 motorbike. Then you record it in your books with the amount. No. The transaction always happens before you record the transaction. So because every transaction in accounting always happens before you record, they base on that and then they say that accounting is history. Accounting is always seen as recording history. And that is why they say accounting is a historical record. Accounting always record past events. Now, let me also read my submission. Accounting has been perceived as a means of providing the history of an organization and its transactions with the society. Unless there is history, you cannot see accounting. This is their point. You cannot see accounting unless there is history. Because financial statements are prepared on past record, this makes accounting a historical record. All is about reality. And unless the thing happens, you cannot record. So if you don't enter into the transaction has not happened. Can you record? No. And that is why they are saying accounting is seen as a historical record. The final one, which is information system. The final school of thought. You ask them what is accounting, and then they say, oh, that information system thing. That is all they say. Accounting is an information system. Why are they saying there is accounting is an information system? Now, in level 200, you were taught the information system. Who can mention the element of information system for me? I've unmuted you all. The element of information system. Or what are the things that makes up information system? The variables that makes up information system. Yes, who can mention them? Let's assume I have not explained this and you've seen this point in an examination. Explain accounting as an information system. In fact, if you don't know what information system is, you cannot explain this answer very well. Yes, who can tell me? Jacob.
Sir.
Information system, element, mention one.
Oh, it is. It is seen as an element of information system transaction records.
I've asked a question.
Am I right?
If you explain. I said mention one element of the information system you learned in level 200.
Is my answer right?
Your answer is wrong. Mavis, unmute yourself. Mavis, mention one of the information system you know.
Internal control. Internal control.
Internal control. At least you have tried. Mercy, mention one.
Hey, Selma. Selma, computer software.
Computer hardware. Delphine.
Hey, Selma.
Delphine, I mention one.
You are laughing.
Delphine, I mention one.
Hey, Del, we can't hear you.
Hello, Selma.
Yes, the element of information system.
Hey, Selma, is it transmitter?
Recorder. Hey,
Okay, Selma, media. Selma, the media.
the media.
Hey,
Hey, you people.
yo,
Hey.
Selma is okay.
Hey. Inputs, process, outputs.
Hey, uncle.
Hey, you people.
It's been a long time, that's why.
It's been a long time. You will need to So for you to call something an information system, there must be an input, process, output. Are you getting it? So they are saying that accounting is seen as an information system because it has the element of an input, process, output. That is what they use to buttress their point. Why are they saying that there is an input, process, output? Now, when you are defining accounting, how do you define accounting? Jacob, level 100, what is accounting?
Something the act of.
I may not come out with the right definition.
It is your duty to give me the definition of accounting.
Detailed explanation.
What is accounting?
Is the act of.
I'll tell Akufuado to continue to lock people down.
No, please.
Hey.
Something is the act of.
Accounting is the act of. Then the rest is
accounting is the act of recording, classifying, and summarizing in a significant manner. These are in terms of money transactions. Be as part of the economy.
So accounting, you start more, then you start recording. You don't collect. I said Murefi.
So the collection will come before the recording.
The collection come before the recording. The source document. Okay. If you go and buy the thing and you don't collect your receipt and things, how can you come and record?
Oh, okay.
That is why you were taught the source document, the journals. It is the journals used to collect the information. Then you record them in the ledgers.
Oh,
Are you getting it?
Okay.
recording them in the ledgers, then you now start to process them by preparing your financial statements.
Okay.
Once you process them, what do? You communicate. So the final output of everything is your balance sheet and your trading profit and loss account, and then your cash flow statements. From there, then you publish it to the world. Have you seen any business publishing its ledgers before?
No.
Are you getting it? So these people buttress their point by saying that accounting is seen as an information system because it perceives that it links the sources of the information system with its users. And this information system follows the concept of what? Input, process, output approach. Now, they said there is a collection of data. You collect the data, you process the data. I get in the manner of processing the data, you classify them, you summarize them, and then you present them. I get So in the presentation of the information, you end up by communicating it. That is output, where you give it to the world for their decision making. The view also assumes that accounting system is the only formal measurement system in the organization. I get it. So you can see that in all the ideologies that I'm explaining, there are various key points inside that distinguishes each of them from the other. I get it.
Yes.
And when you are explaining them, and those key points are not hammered on, you fail to score the points. So please and please and please again, this question, there is a question that everybody will answer. The various images of accounting, they're very basic one. So you should be able to grasp it and identify them and know them head on. They are not difficult. I get it. So that is just for the first question, question 1A. Question 1A. We'll look at the question 1B. To what extent do you agree that accounting can be regarded as an art or a science? To what extent do you agree that accounting can be regarded as an art or a science? Let's look at the question, the second question. To what extent do you agree that accounting can be regarded as an art or a science? Now, this question is very tricky. It's like a debate. You are going to answer the question as if you are debating. And so therefore, you speak for, and then you speak against. Then at the end of the day, you draw your conclusion. So what it means is that you speak for accounting as an art. What makes accounting as an art? And then you speak for what makes accounting as a science. Then from there, you draw your conclusion. So now, there are two schools of thought over here. One school of thought also sees accounting as an art, acting. One school of thought also sees accounting as a science. Now, why will people argue that accounting is an art? Now, if we say an art, it means that for you to become an actor like John Dumelo, unless they teach you, unless they show you the ethics of acting, in fact, unless they show you how to do it this way, do it this way, do it this way, Some of the people you see on the TV there, they'll be crying. Their mother is dead and then they are crying. It's not that they are crying. They've taught them how to do so. You see somebody there, he changed the mood, laughing one day, it's all acting. So unless you are taught before you can do it. But when you take, let's say, science, they said if you want to prepare banku, you take the mori, you mix it, you do this, they write it in paper. You need this, you need that. You can do it, and then that is it. You are gone. When we're in JHS, they said we did something, testing the chlorophyll of a leaf. We were not science students. In fact, the teacher who was teaching us was not a science student. But he said, they say you need apparatus, you need beaker, you need cylinder, you need one liter of oil, you need one this, you need charcoal, you need fire. So the things has been listed there, and then they show you the step. Step 1, boil the water. Step 2, put the leaf in the water. Step 3, put sodium chloride on it. Step 4, take the leaf, put it in the sun. Step 5, do this. Then we are following. So you should know the clear distinction among the two. So now the people who argued, or those who argued that accounting is an art, what did they say? They said accounting is an art because it is a skill. You need the skills necessary to be a good accountant. You must be taught the skills. For you to become a good accountant, you must be taught. You cannot just wake up and become a good accountant. We must teach you the skills in accounting. Debit the receiver, credit the giver. When you go and buy something, take receipts. Every money you spend, you must make documentation for it. If you are spending money without justification, it is a crime. You must follow the principles, the general accepted principles. You must follow the international reporting standards. You must follow the international accounting standards. So unless you are taught, you cannot call yourself a good accountant. They also argue that accounting is an art because it is full of unique skills and styles and professional way of doing something. Why are you finishing school? Then they will say before you become an accountant, you must be a chartered accountant. So you finish your polytechnic, you go to ICA again. If you want to be an international accredited person, you must write ACCA before you can call yourself a professional accountant. Now, they also say that you collect data, materials of financial nature, and after that, you record and classify them by putting the data together so that it can be understood by people. If you are not taught these things, how can you do it? Even the presentation of information is taught. Either you present it in a vertical way, you present your financial statement in a vertical way, or you present it in a horizontal way. When we were preparing the ledgers, we taught you how to prepare ledgers. That you don't draw the T account, and then one side, the debit side is longer than the credit side. You don't draw it like F. You don't draw T account like F. Or you don't draw T account like 7. You draw the T account in a specific way. We taught you how to do balancing. All those things are taught. We taught you how to put the name of the account on the ledger, not on one side. You put it in the middle. When you are balancing, let the totals be on one line. You have balance carried down just on top of the line. You have balance brought down on another side just below the balance. All those things are skills you will be taught. When you are preparing the trading profit and loss account, we show you systematic way of arranging the items. the balance sheet, you are shown a systematic way of arranging the items. All these things are skills you must be taught. The placement of items must be placed in a unique style. And all these things you are being taught. And that is why these people are saying that accounting is an art. Now, those who also argued that accounting is a science, they are saying that it has the element of science and scientific approach. Now, why are they saying that accounting has the element of science and scientific approach? They argue that accounting follows steps and procedures and rules just like science. Analysis to establish an empirical evidence is the hallmark of science, and so do accounting. Now, why are they saying that? They say that science follows steps and procedures and rules. After that, you make your analysis to form an empirical opinion. Now, in accounting, you also do same. You follow steps and procedures. The steps are that collect the data, classify the data, collect the data, record the data, classify the data, analyze the data, and then you communicate the data. So it's steps you are following. If you don't collect the information, how are you going to record them? So from the collection, you record. From the record, you summarize, you classify, you process, then you report. We do what we call financial statement analysis. Once you prepare the financial statement finish, we are in a position to know that, oh, last year the company made profits. This year you also made profit. What is the trend? Oh, there is an increment in profit by 20%. Although last year we made profit, this year we also made profit, but the profit has reduced by 20%. These are the empirical evidences we draw from science, and we are also making those conclusions. Sometimes you can do ratio analysis, and then you can end up saying that no, where the company is going, the company is in a distressed position, or this company is suffering. A company can be declaring profits, but the company is suffering. You can make those empirical analysis and those empirical deductions from their financial statement. And that is what science also does. So these people buttress and say that, yes, accounting is a science. Are you getting in? They also argue that science follows observation. After everything, you do observation in science. So when we are testing for the chlorophyll, it's like they are testing. Is the leaf changing? Is it science? They do a lot of observation. So accounting also follows the principle of observation. That is their point. So you can be observing something and they say, no, where the company is going, the rate at which you are spending the money, if you don't take time, the company will collapse. So that is their point. But at the end of the day, accounting alone is not an art. Accounting alone is not a science. Now, accounting deals with human beings. And so therefore, accounting cannot be called as an art. Accounting cannot be called just as a science, but accounting can be called a social science. Why are we saying accounting is a social science? Because accounting deals with the society. Accounting deals with human beings. And because society changes every day, everything accounting does has an impact on the society. Whatever society does has an impact on accounting. Accounting is therefore a social science. So my conclusion to this question, I said that finally, accounting deals with the environment, which includes social groups. It is concerned with transactions and other economic events which have social consequences and influence on social relationships. It produces knowledge that is useful and meaningful to human beings. Engage in activities having social implications. On the basis of the above guidelines and arguments available, accounting is therefore a social science. So I've made my point, I've argued my point, and I draw my conclusion that accounting is a social science. So in an attempt to answer this question, don't just answer it one way, whether accounting is an art or a science. Don't draw conclusion on each of them. Argue the points out and draw the conclusion using the two. So your final conclusion is going to be that accounting is a social science because it deals with society or the environment. And whatever the environment does has a direct impact on accounting. And so therefore, accounting is a social science. So when you have done this, you might have successfully answered question 1. If you have any question, you can raise up your hand, or you need more clarification, I'll do that for you. Now, we can continue with the second question. Now we can continue with the second question. Identify the factors that promote change in accounting environment and their consequences on accounting practice. The factors that promote change in accounting environment and the consequences. Now, it is a 2-in-1 question. Now, when you go into your handout, you are going to see it as accounting in a changing environment. The points are there. Accounting in a changing environment. And then the consequences too are there. Now, whenever you pick the factors, hello? Whenever you pick the factors, make sure the factors is linked to one of the consequences. So the consequences, what the factors, what consequences has it had on the society? That is what we want to know. So when we pick a factors like, now let me explain so that you understand. When we say accounting in a changing environment, we are saying that now you can see that society is changing. Society is changing. Previously, we record accounting manually. In fact, you go to one accountant office, they have a big ledger on his table with correction fluid, about 50 on his table. He has 10 red pens and 20 blue pens, black pen, ruler. You don't mess up with that accountant pen, ruler, or correction fluid. Why? Because those are the tools he's using to work. And when you mess up with him, he'll mess up with you. He can make correction, and then he has to be cleaning, doing corrections, plenty. Are you getting it? Now, previously people don't even, people don't want accounting information. What do they even need it for? But as time goes on, things are changing small. Then we stop using those big ledger books. Then there comes computer. Then we started typing them. There comes computer. Then they started putting them in an Excel. As time goes on, then software started popping up. As time goes on, now people from everywhere are beginning to learn. Now in the school, purchasing and supply people, they teach them accounting. Marketing, they teach them accounting. Secretarial and management, they teach them accounting. Previously, the accountant can come and stand in front of you, and then you confuse you, basa. The accountant will just use technologies, the debit, the debtors, the creditors, and then the outstandings and the prepayments. He'll use the terms wanyang. Like the boy that they say is at the SHS, who come and tell the father that he want to buy geography book. He said, Daddy, we want to buy books, 3 books. One is called Geo, one is called Gra, one is called Free. You think if the father learned geography, the guy can come and stand in front of him and do that? No. But now the environment, because the environment is changing and everybody wants to know, have interest in other areas, it is having impact on accounting. We already learned that the society have impact on accounting. And whatever changes in society will have a direct impact on accounting. And so therefore, what is the first factor that have a change in accounting or that have impact in accounting? The second one, development in quantitative methods and in the behavioral science have also have a significant impact in accounting. Now, the issue of quantitative methods is a significant issue that moves with environment, and you apply it as and when it's useful. So the accountant must be mindful of these factors. Now, as an accountant, if you are not abreast with whatever is going on society, you will be outdated. Now you are in level 200. Why did they taught you quantitative methods? Why did they taught you networking? Why did they taught you transportation? Why did they taught you assignment? Why did they taught you stock levels, minimum stock level, maximum stock level, economic order quantity? Because now these people, they also have interest in accounting, and whatever they do directly affect accounting. So if as an accountant, you don't know anything about network diagram, and then the project manager just brought a huge network diagram, then just explaining certain things, requesting for some money. As an accountant, if you don't have any idea in network diagram, how can you justify whether what the person is telling you is true or not? As an accountant, if you don't have any knowledge in stock levels and they come and then they are bombarding you with technologies, how are you going to understand? And because they have direct impact in whatever you do, they have direct impact in your budget, you must know. Everything that you do lies in your budget. So if you don't know, you are not updated, how are you going to prepare a meaningful account? And so therefore, the consequence is that there has been a dramatic effect on accounting research. Every day, the accountant is there doing research day and night to see the changes that are happening in accounting. Now, GRA wake up one day, then he say he has reduced the tax from 25% to 20%, or has reviewed the VAT from 15.5 to 12.5. As an accountant, if you are not abreast, how are you going to factor that one in your accounting processes? So as an accountant, you must always be on the ground. Now, number 2, the emphasis on decision making has brought other disciplines, which one were viewed as separate areas, of knowledge. In the past, if you are in a business, or you are in or you are in an organization, and then procurement people want something. Procurement people prepare their budget and everything, then they'll just submit, oh, we want 10,000. Then you give them 10,000. You don't even bother about procurement. Whatever they do doesn't concern you, the accountant. Sales and marketing, they said they want this amount, to give it to them. It doesn't bother you as an accountant. Operations, they want this amount. That you, the accountant, you, the whatever you are focused on is that I have been given 100,000. How did I spend 100,000? That is what you, the accountant, you are interested in. So they gave me 100,000. How did I spend the 100,000? I should be able to render account for that. So I gave 20,000 to sales. With their family, what sales uses the money for is not my problem. I get it. So in the past, the various departments and the various sectors or the fields were seen as accountant. The accountant do the marketing for your day. Accountant do the purchasing and supply for your day. I get it, the scenario. So now, because of the world we live in, everybody wants to know what is going on in every sector. So when we are going for meetings nowadays, the board cannot sit down and meet with only sales. Once they organize the meeting, the sales manager is there, the procurement manager is there, this manager is there. Then they said, accountant, come and sit inside. So everything that they will say boils down on the accountant. Accountant, they said they want 10,000. Can we give them? They say, yeah. Accountant, they said they want 20,000. I said, no. We cannot give them 20,000. We can only give them 15,000. So at the end of the day, the decision-making process lies heavily on you. You are a key person in decision-making. Previously, that they will just go and make their decision. Whatever the money, sometimes they said they can want 20. They say, no, based on that, they need 50. 20 cannot solve that problem. I get it. So accounting has become an interdisciplinary subject, which has brought together areas like economics, social science, sociological science, and quantitative science, which in recent past were not brought on board. So now the accountant must look at these cognate areas before taking decision. So if you are taking decision of giving all the money to sales, procurement, or pesca, if you are looking at giving all the money to operations, where these people they need money. So the accountant must look at all the areas before taking decision. That is what it means. Now, the effect or the consequences is that now the accountant or the accountant in management does not exist in isolation anymore. The accountant now works hand in hand with management. So the consequence of this effect or this factor is that now the accountant is no more in isolation. Where in previously you are in isolation, now you work hand in hand with your management. Whatever goes on in the accountant department, people know about it. Whatever goes on in other departments, you the accountant, you also know about it. Now, the next point or the next factor in your handout states that the traditional accounting areas are being invaded by experts in cognate areas. Now, there are a lot of people out there who even know the accounting more than me and you. Before you say, you cannot go and stand in front of somebody and then you just mention some terminology just to tie the person down. You can't do that because now you see somebody who is an accountant. The same person is a lawyer. You see the same person is a procurement officer. The person has a diverse expertise in different areas. You see somebody, he says he's a doctor, but he now is an MP. He now is an accountant. He now is a this. He now is a that. So people from different areas, people from different important fields are evading the field of accounting. So once a lawyer is evading the field of accounting, why is it that you, the accountant, you not have interest in law? Whilst the business will go and be signing contracts with people. So that is the reason why, as the accountant, you must take note of all these changing things in the environment so that you can make a meaningful decision. Now, the impact is that finally, the emergence of social responsibility accounting imposes new information objectives for accountants, and this will require new accounting methodology. That is the consequences. So now, with accountant, you must have a different methodology in how you do your things. You don't go one way anymore. If lawyers are becoming interested in your field, why wouldn't you also be interested in their field? That is what it means. Let me give you one more point, then you can go and read the other one. Now, they are also saying that accounting is a social science. In fact, I've explained it even in the first point already. Accounting is a social science which deals with the society. The way you cannot predict the behavior of human beings, so it is with accounting. You cannot predict accounting. Accounting does not rest upon the universal truths or the general law, but rather the concepts are rooted in the value systems of society in which it operates. So as the society is changing, it will have a direct impact on accounting. Now, at the end of the day, what are the consequences of this? As the accountant, you must always be doing research, which means that there has been a dramatic effect on your accounting research, because as society is changing and you cannot predict human beings, always you are researching. You are making a lot of research so that you make sure that whatever you are putting out there is the truth. If not the 100% truth, at least 99.9% truth is in whatever you are saying. So this is how you are going to answer this particular question. Any question? Now let's look at the second question. Accounting theory, therefore, as indicated by Hendrickson, represents the coherent set of hypothetical, conceptual, and pragmatic principles, forming the general framework for a field of inquiry. In fact, by the time you finish reading this question, then all the words in your mind, all the words in your head to put down for the answer is gone. Because the terms are heavy for some people. And some people, because they started reading these heavy grammatical expressions, then they get confused. Then their mind begins to go far away. Where are they going to get the answers from? But you must take your time and carefully read the question. In fact, the answer to the question is in the question you are reading. So let's start. Accounting theory, therefore, as indicated by Hendrickson, represents the coherent sets of hypothetical, conceptual, and pragmatic principles, forming the general framework for a field of inquiry. With reference to the above assertion by Hendrickson, critically examine the various methods adopted by Hendrickson and others in the development of an accounting theory as basis for the development of accounting principles and policies. That is what the question is asking you. You are to critically examine the various methods adopted by Hendrickson and others in the development of an accounting theory as a basis for the development of accounting principles and policies. Now, we have three methods. The descriptive theory, the normative theory, and then what you call the agency theory. The descriptive theory, the normative theory, and then the agency theory. Now, I'll explain them one by one. Now, when we talk about the descriptive theory, the theory is an explanatory theory. So when I say, what is your name? I want you to, I'm describing. How old are you? So the theory gives an explanatory value to issues. And the theory is dependent on what is. Anything that the question is, what is, forms part of the descriptive theory. So anything that you hear, what is, know that the answer you are giving is a descriptive answer. Before you finalize your proposition, you must be able to get in touch with the environment. And then based upon that, you can now form an opinion. So the descriptive theory is saying that before you can come out with an accounting policy, or before you can come out with an accounting principle, unless you ask the question, what is? And if you don't ask the question, what is, how are you going to get an answer? And the answer is from the society. You are currently doing your research work, and in 1.3 or 1.4 of your chapter 1 or in your proposal, you have what you call the research question. If you don't ask the question, how are you going to get the answer to the research objectives? And the question you are going to ask is from people. We are going to get the question from a population. You are going to get the answer from the society. So they are saying that if you don't ask the question, if you don't get in touch with the society, you cannot get an opinion. That is what the descriptive theory is saying. They are also saying that the methods adopted made the assumption that before you form an opinion, study the environment first, because the environment is a dynamic one. Because the environment is, we just learned about the changing environment. So if we know that the environment is a dynamic environment that can change today, we wake up 2019 to 2018. Nobody knows COVID-19 will be so grateful like this that we'll be in house by now. You have never imagined in 2019 when you were praying in church to cross over to 2020 that you stay in home. But today here we are, because the environment is changing. And because the theory you are bringing out is going to affect the environment, you must first of all get in touch with the environment and ask the question, what is? That is what the descriptive theory is saying. The normative theory. The normative theory also depends on what ought to. So whilst the descriptive theory is asking question, what is? The normative theory is asking a question, what ought to? What ought to? So what is the subject matter of accounting? And when we know these things, then we can now base on that to formulate an idea which will guide what? The subjects. They also believe the environment is ideal. So whilst the descriptive theory people believes the environment is a changing one, the normative people believes the environment is not a changing environment. The environment is an ideal environment. In fact, the environment is a stable environment. What you see in 2018, you see the same thing in 2020. That is what they believe in. So they just look at the subject matter, and then that's it. Debit the receiver, credit the giver. That's all. They don't look at what the environment, because the environment, no, they hold the environment constant and look at other factors as independent. That is what they look at. They look at other factors before they bring out their proposition. But the first people, they hold other factors constant and look at the other ones. And then they look at the environment. Sorry, that is what it means. So the normative and the descriptive are opposites of each other. Now, when you look at the agency theory, the agency theory formulates, or they formulate theories and principles from the basic assumption that we have what you call the agency principal relationship. They look at that, okay, there is an agent, there is a principal. What relationship exists between the agent and the principal? So the owners of the business are there. They entrust the business in the hands of the manager or the CEO, and then they run the business for them. What relationship is there? And it is based on those things that they use to formulate their accounting proposition. They said that attempts to describe financial accountants and accounting theories from which they originate, and to explain this development based on the economic theory of prices, public choices, and economic regulation, have been grouped under the title agency theory. This theory attempts to offer a consistent and relatively competent explanation for accounting theories and standards. The basic assumption of this theory is that individuals maximize their own expected utility and are resourceful and innovative in doing so. Therefore, all the disclosure issues raised by this theory is a particular individual expected benefit from a particular course of action. This is expected benefit of a manager or a stakeholder vis-a-vis corporate decision. Included in the theory is the fact that there is a total conflict of interest between the owners of a firm and management, in the view that each one of them desire maximum benefit at the expense of each other. So whilst the management are also looking at ways and means to also maximize their wealth and things, the owners are also looking at ways and means to maximize their wealth. And these are the two main variables these people base on to also formulate their theory. So if they are going to bring in any accounting theory, or they want to formulate theories, it will be based on this. And it is based on the agency theory. That is why we have auditing. It's based on the agency theory. That is why we have auditing. So that everybody will be clear. Nobody is cheating anybody. That is it. So this plain the question you've seen over there, just to be answered. Short. And then you are done. If you have any question, you ask. And then I'll gladly answer you. Now, let's look at the next question. There has been a long debate between the economist and the accountant with regards to what actually constitutes income of an enterprise. Comment on this debate as generated by these professionals and show the extent to which you agree with them. So the economists and the accountants, what the economists call web, Adam Smith, what Adam Smith and his people call web, is different from what the accountant also call web. So when you talk about income, the economists will tell you, hey, the money in your pocket is your money, that's the income to you. In fact, when you go to the churches and you mention income, it is different for them. When you come to the accountant does not just see the money in your pocket as an income. Even the money in people's pockets is an income. Once it belongs to him, it's an income. That is what we mean. So the debate has been between the two of them. Now, as a judge, do you agree with the economist's definition of income or the accountant definition of income? Now, my submission is quite long, so I'll read it. And as I read, you take note of the salient points. Now, accounting income is operationally defined as the difference between the realized revenue arising from the transactions of the period and the corresponding historical cost. So I'm explaining accounting income. I said accounting income is defined as what? The difference between the realized revenue and then the historical cost. We learned in accounting concepts that income is realized not when it is received, but when it is earned. We said that you don't just say that when you receive the money, now you have, at the time you earn income, at the time you realize it. So immediately I sell the item to you, or I render the service to you, you are owing me. So income is earned, whether received or not received. Once the transaction has gone through, the income is earned. That is why you have credit sales on your books. That is why you have cash sales on your books, and you merge the two and make it sales. That is why you have costs in your books. You have outstandings, you have accruals, you have owings. You have some of the expenses you have paid, some you have not paid, but you group all of them and consider them what? Expenses. That is why you have creditors on your books, because you bought on credit, but you realize it, or you indicated it as a cost of sale, though you bought a thing on credit and you bought some on cash. So the accountant does not really define income as the physical cash in your hand. No. Once it belongs to you, it is an income. Accounting income is based on the actual transactions entered into by the firm. We just learned that accounting records historical record. And once the transaction has not happened, you cannot record it. So once the transaction has happened, you record. So let me take it again. Accounting income is based on the actual transactions entered into by the firm. That is, revenues arising from the sale of goods or services, minus the cost necessary to achieve these sales. So the sales you have made, how much it costs you to make those sales is the cost of sales. So the things you have sold, how much it costs you to buy them is the cost of sales. So once you take the cost of sales from the sales, you get the income. That is how the accountant defines income, or that is how the accountant sees income. Accounting income is based on period postulate and refers to the financial performance of the firm during a given period. Accounting income, so when the accountant is talking about income, he's not, if you say income, he means income from January 1st to 31st December 2020. He is not talking about income from 1942 to 2020. No. So if the accountant says the income, he means an income for a specific period. That is what they mean. Accounting income is based on the period what? Postulate. Accounting income is also based on revenue principle and requires a definition, measurement, and recognition on revenue. I just explained the revenue recognition principle. That you recognize revenue not only when they are received, but at the time they are earned. So revenue is earned whether received or not received. Once the transaction has been entered into, revenue is earned. The recognition of revenues and consequently income. Accounting income requires the measurement of expenses in terms of the historical cost to the enterprise, constituting a strict adherence of the cost principle. So when we are talking about accounting income, or the accountant is defining accounting income, and you don't talk about the revenue principle, accounting concept, you don't talk about the revenue concept, you don't talk about the cost concept, you are out. Accounting income is the revenue concept and the cost concept. That is what we mean. Accounting income finally is based on the matching principle. So what are you doing? You are matching revenue against cost. So when I said accounting income, you are talking about three concepts now. The revenue concept, the cost concept, and then the matching principle. You match revenue against cost to get accounting income. So when the accountant is talking about income, he's talking about what? The matching principle. That is what we mean. According to what constitutes an income from the economic point of view. So now I'm going to explain how the economists see accounting income, economic income or income. Example, Mr. Kumi, how he will explain income for you. Adam Smith was the first economist who defined income as an increase in wealth. Adam Smith said that, hey, income means increase in wealth. So if 5 years ago, you are earning salary, 100 Ghana, today you are earning 1,000 Ghana cedis, income. But once your wealth is increasing, it's income. So the amount of increment on your wealth is the income you are talking about. So the difference between the 1,000 and the 100, the 900 is the income Adam Smith is talking about here. Now, Alfred Marshall, in particular, followed Smith's concept of income and linked conceptualization to business practices. The accountant is saying that income is about revenue and costs. The economic aspect of income is full of what? Objectivity. Because what is worth to somebody may not be worth to another. So if today they are paying you 2,000 Ghana and you are jumping over the rooftops, despite who command 2,000 Ghana, despite will not jump over the rooftops. Because 2,000 Ghana cedis for despite is like what he can give to his girlfriend to go and buy water at the roadside. But you want to give you 2,000 Ghana cedis right now, you'll be jumping over the rooftops. So what you consider income, somebody may not consider income. Somebody will be fighting with their mates over 10 pesos in the car. But will you? So the amount of the premium the person placed on the 10 pesos is more than the premium you place on the 10 pesos. That is what the economy is saying. Fisher, I should have asked you the names of some of the economists to see if you could have remembered them. Fisher also defined economic income as a series of events that correspond different states. So the enjoyment to psychic income, the real income, and the money income. Psychic income is the actual personal consumption of goods and services that produces a psychic enjoyment. In fact, once you are in a state of comfort, oh, I'm okay, yeah. You go to the mall, you go and enjoy yourself, you go and buy pizza, you eat, you are okay. Once you have that state of mind, of calmness, that I'm okay alone, is what Fisher is talking about. Now, let's continue. In fact, Fisher is talking about your inner mind. So once you have the satisfaction that I'm okay, I don't need anything. As I'm here, I don't need money. You don't need anything. You are okay. It means, yeah, that's it. That is what Fisher talks about. So Adam Smith talked about increase. Alfred Marshall also talked about the concepts of wealth in a different perspective. Fisher also talked about the concept of income in a different perspective. Finally, the economists also define income as an event that gives rise to psychic enjoyment, that is real income. So the economists, they are seeing the income as the money in your hand. In fact, once you don't hold that money and say it is for me, you can't consider it as an income. They argue that real income is the best measurement by the cost of living. In other words, the satisfaction created by psychic enjoyment of profit is measured by the money. In other words, the purchasing power. So the simple and short is that whilst the accountant sees income as the difference between cost and revenue, the economist is looking at your bottom. Look at your pockets and see how much you can use to afford to buy something. So if you have the purchasing power, then you have, if you have the purchasing power, then you are considered wealth, or you can consider yourself having an income. That is all. If you have any question, you can ask me in the next 1 minute. What do you understand by the term monetary items and non-monetary items? I know this one there, if you are reading the book by now, you have not gotten there. But I'll explain them to you and you understand. What do you understand by the term monetary items and non-monetary items. Now, I think it is somewhere in your handout. I don't know the page. Well, after accounting income, you just go forward, you see them. When we talk about monetary items, we are basically talking about transactions that are fixed by contracts, or by their nature, they are expressed in CD value, regardless of the changes in price level. So if I come and take loan from you and the interest rate is 20%, you said the interest rate is 20%. If today interest rate has dropped to 2%, I'll still pay 20%. That is a monetary item. If I come and take loan from you and let's say it is $1,000 and the rate was 5.8 by then, and today I'm coming to pay you $1,000 and the rate is 5.2, I'll pay you at the rate 5.8 because we agreed on that rate 5.8. That is what we agreed on. So there are transactions that are fixed by contract, or by their nature, they are not affected by changes in prices of goods and services. So when prices of goods and services have changed, they don't affect them. So for example, your school fees, at the beginning of the semester, they charge you, pay this. Whether prices has gone up, prices have come down, you are in lockdown, you are not in lockdown, they say you pay. That is what they basically mean. I think the time is still getting, okay, I'm left with 8 minutes here. So I can use the 8 minutes to finish this particular one, then you can go to another one. So when we talk about monetary item, this is basically what we mean, okay? But non-monetary items or non-monetary transactions, these ones, they are not fixed by contract. So prices of goods and services can affect them. Now, the monetary and non-monetary transactions, we have what you call monetary assets and monetary liabilities. And then we have what? Non-monetary assets and non-monetary liabilities. So we have two class of them: monetary assets, monetary liabilities. Non-monetary assets and non-monetary what? Liabilities. Monetary assets include cash, debtors, loans. So these are some of the monetary assets: cash, debtors, and loans. So you giving loans to people. Are you getting it? They exist as money or as claims to specify sums of money. Holders of monetary assets suffer loss in the general purchasing power of their assets during periods of inflation. So when prices are going up, people who hold monetary assets, they lost big time. So I sell something for you, 5 Ghana cedis on credit. Then today, you say you pay me in 3 months' time. 3 months' time, the thing can be sold for 10 Ghana. Let's say sanitizer. I sold sanitizer for you. One full container. Let's say 10,000 Ghana cedis. Somewhere in January. But somewhere in March, one full container can be sold for 60,000 Ghana cedis. I am in. Meanwhile, I sold you for 10,000. You have not even paid me up to now. That is what it means. So the example is that if one holds money in the form of a bank deposit, and the yearly inflation is 25%. The loss on the purchasing power at the end is 25%. So it means that if you go and deposit money or you hold money, cash, you hold cash like this, or people are owing you, or you give loans to people and prices of goods and services begin to go up, you are losing. Because by the time they bring that money to you, or by the time you use that money, you cannot buy the same thing you could have used that money to buy in previous time. So at the end of the day, these items, they are not affected when price of goods and services are changing, but the purchasing power goes down. So if the value is 100, the value is 100. Yes, then I saw something for 5,000. It is 5,000 I'll take from you. Price of goods and services are changing. Doesn't mean that if now it is 60,000, I should come and tell you 60,000. No. That is what monetary asset means. But monetary liabilities, such as creditors, bank overdraft, and long-term loans. Now, this is the loan you are going to take. The first loan is a loan you have given. This one is a loan you are going to take. As the value of monetary falls during inflation, it follows that the value of such liabilities in current value will fall. And this fall represents a purchasing power gain. So if prices of goods and services are falling, then you, the one holding monetary liability, you are gaining. That is basically what it means. So at the end of the day, they are asking you to explain what it means by monetary items and non-monetary items. When you pick the monetary items, you explain what you call monetary assets and tell us at the point in time where they gain or lose during price level changes. Then pick monetary liabilities. You give examples. Then tell us the point in time they gain or lose during price changes. I'm sure you have not read there yet, but maybe when you read there, you get more understanding to whatever I'm saying. Then non-monetary items and liabilities, such as fixed assets, stocks, and shareholders' equity, which are assumed neither to lose nor gain in value by raising or inflation. So these things, they don't lose or gain by view of inflation. Whether prices of goods are going up or they are going down, they don't lose, they don't gain. For example, if stocks on hand, you have closing stock at the beginning of a year, which becomes your opening stock, remain unsold at the end of the year, there will be no power loss, purchasing power loss, since one assumes the sales price when they are sold would be adjusted upwards to take account of the fall in the value of money. So what it simply means here is that if last year you have stocks you bought for 100,000 Ghana cedis, and this year you couldn't sell it, and next year you can sell it for 200,000 Ghana cedis. You sell it for 200,000 Ghana cedis. So if prices of goods and services are going up and you are losing, all you need to do is to increase the price and you sell, and then that is it. So we are explaining the monetary items and non-monetary items as used in the treatment of gains and losses when accounting for price level changes. So you don't just explain the monetary items and non-monetary items and leave it there. You give the relationship between them when prices of goods and services are changing. Then there and there, you are in the process of answering the question. If you have any question, you gotta ask me and I will answer you. If no question, my time is up. So I'll disconnect and connect in the next 1 minute for us to finish this. There are most of the questions that are repeated over here. So I'll just show you the linkages and then we'll end the day. So join back in the next 1 minute, then we continue. Now, when you look at this particular question, Delphina, can you read the first question? Delphina, can you hear us?
Yes, yes, please. The process of change has had a drastic effect on accounting research and practice. Clearly identify factors for the above change and such change on accounting as a discipline.
Delphina, have you seen drastic or dramatic?
Sorry.
Dramatic.
Sorry.
Good. So the process of change has had a dramatic effect on accounting research and practices. Clearly identify factors for the above change and show into detail the consequences of such change on accounting as a discipline. We've answered this question. Have you seen it? We've answered this particular question. Let me see if I can see the previous one, how the wording was, how they worded that question. See the first question, the one that we answered. They said, the first question, look at it over here. Identify the factors that promote change in accounting environment and their consequences on accounting practice. Now, one thing I need to make it clear for you people to know is that now, one thing I must make clear for you people to understand is that for you to be able to answer these accounting theory questions very well, you must be abreast with all the questions. If you are the type that you have written auditing 1, you have written auditing 2, and as of now, you don't know how questions are being thrown by your lecturer, or how your lecturer picks question, or you don't know the style of questioning by a lecturer, then trust me, the result you had in auditing 1 and auditing 2 is going to play a role in accounting theory over here. You see question 2A here, identify the factors that promote change in accounting environment and their consequences. The answer you provide here is the same answer here. It's the same answer you are providing here. Clearly identify the factors that promote change. Clearly identify factors for the above change and show into detail the consequence. It's the same answer. But just that in this question, they have added more words. So you say, yeah, what is this man trying to say? What dramatic effect and things? Then you are confused. So the question 1 here, we've answered it in this particular illustration, question 2A. When you look at question 1B, briefly discuss the benefits of accounting as a discipline to the stakeholders. The benefits of accounting as a discipline to the stakeholders. Now, I'll mention the benefits for you, and then when you read them, you add the flesh to it. They are there in your book. Now, one benefit is that it promotes honesty of the accountant in general and the auditor in particular. That is one benefit of accounting. What it means is that once the accountant, you are able to prepare your financial statement, it gives, or it shows your honesty, that you are willing to render account for whatever you have been given or whatever you have been asked to do. And the auditor, because the auditor is saying that he's coming to audit you and say that, okay, whatever I've audited is the true and fair, whatever, it must show the true reflections on the ground. So at the end of the day, it promotes the honesty of the accountant in general and the auditor in particular. It also provides stewardship and accountability status of the firm. So accounting, one benefit is that it promotes the accountability stewardship status of a firm. Take note that in auditing 1, you learn about stewardship. They say auditing is about stewardship. So you should know. It also promotes cooperation and prevention of what? Conflict among stakeholders. The moment financial statements are produced, it is a form of what? Authentic source, because it governs the appropriate policies and suspicions of conflict are what? Minimal. So anybody who will talk about a company will be talking about the financial statements. Anything you say, let's consult the financial statement. Anything you say, let's consult the financial statement. That is what it means. So it prevents conflicts. So nobody will be saying one way that the company is doing well. Then another person will be saying in one way that the company is not doing well. It is the financial statement that is saying. It also communicates economic experience to the public. We talked about economic accounting is seen as an economic reality. And they are telling you that one benefit of accounting is that it communicates the economic experience to the public. It tells the public that, hey, the economy is doing well, or the economy is not doing well. That is what it means. Accounting also serves as a basis for what? Decision making. So once there is accounting, it helps people, or it helps stakeholders in their decision making. If you are an investor, based on the accounting information, you know that the company is a good company. It's a company that is viable. When I pump in my money, I can make something. You know that, oh, the company is not doing well, so I don't need to pump in my money. That is basically what accounting brings to the table. Now, look at the next question. Clearly describe why accounting as a discipline is regarded as an information system. When we're looking at the various images of accounting, we looked at that. So now, when you were looking at the various images of accounting, you talked about the information system as an input, process, output approach. You talk about collection of data, gathering of information, and summarizing. There, in that explanation, what you were talking about, you were not explaining what input is. You were not explaining what process is. You were not explaining what output is. Now, look at that. Here, the various images of accounting here. There are about 6 various images. And you cannot explain all the images into detail. So you give a brief explanation. So if, let's say, the marks here is 25 marks and they are giving the images, let's say 15 marks and the B 10 marks. Now look at this particular one. This one alone, they are giving this one 10 marks. So it means that the way you explain the information system in the first question, when you explain it here like that, you score all the marks. So in this one, you must explain, you must go into detail what you mean by the inputs.
Yes.
So in collection of the data, feeding the data to the information system, whatever, it must come there. When you are talking about process, what goes into the processing of the data, you must dissect it very well. When you are talking about communicating the information, you must dissect it very well. So your explanation here should be more, and it should make sense than the first one. Then there, you can score at least all the marks. So that is how you answer the C part of the question. If you have any question, you ask me. Or you raise up your hand and then I'll call you. Now, okay, this particular one, theory validation. Okay. I will leave these two so that you will be able to go through whatever we've done now. Then